Good morning. 12/1/2013. Thanksgiving was a wonderful weekend that just has passed by. We all got full on our turkey and visited our family and friends. But we're going to take a look at the reality of the monthly chart on the S&P 500. As we go into 2013, as we went into 2013, right here, this is where we started 2013. Now going into 2014 is we're going to go in and the S&P 500 at a very exuberant level. What do I mean by exuberance? Well, exuberance is where people are very complacent and that we're in such an overbought territory. And I'm just going to show that we had one calendar spread off of that bottom. We had the 2010 rally. We had the 2011 rally that started right here. It carried over into 2012. Now we're going to be ending the calendar spread of 2013. It's December 1. And that the 2009 lows from the financial crises that we had back in 2007, we forecasted that move and that we were going to go down. We were in a housing bubble and lots of other things. So this is the movement in these calendar years. And we're going to start 2014 off, or going into 2014 potentially at a very exuberant level. What does exuberant levels mean? Complacency, no fear. Everybody feels that these markets have are going to go a lot higher. We've made record bull highs in 2013 in this S&P that is overbought, and the price volatility is going to increase. That both the bull and the bear side of markets will have their showdown. What do I mean by a showdown between the two? Is that the bears will have control, the bulls will have control, but the bulls have had control for a long time. And you never want to fight the tape, but you don't want to get hooked in. And I'm going to show you where that support line is going to be. So basically, when we take a look at this whole year, we can see clearly on the monthly level that we had 5-month breakout to all-time highs. We've had a couple of pullbacks in the monthly level, and what we're saying is we've had a 1, 2, 3 months breakout that happened, and that this will end up with a nice correction. In 2014, there's going to be at least a minimum of a correction. There'll be 2 of them at least, and there'll be 10%. We haven't had a 10% correction in a very, very long time. And we are going to be looking at what the S&P 500 put options are and where the complacency is. And the fear, there is no fear. And right here is the S&P 500 put options that we're looking at in January. Of course, we have various different levels and strike prices that the bear will get control. Then the bull will get control. But the bull's been in control for a long time, where the price volatility, the bear side of the market, is where we come down. Now, yes, we had some good corrections or some good pullbacks, and that's a monthly level of the S&P 500. Here is a movement of a weekly movement in the S&P. And here is the calendar year. 1 year ago, we started out with the bull run. We made our tops, and then we had reversals. So once again, when we take a look at how we're going in, how we're going to close out December, today's December 1st, is that I'm telling people around the world and the MMTs and our other trading groups that we do business with, is there's going to be a lot of money to be made, and that we have entered into a period of time where there is going to be in a time series starting in 2014, we are going to have a lot of movement in the S&P. It's not going to be a one-way movement is what I'm saying. And the fact that the breakouts, as you can see here from these bottoms, I'm going to draw some trend lines. And remember one thing about being overbought. This is where the movement starts right here. And I'm going to draw this horizontal or a diagonal trend line right up here. We're starting off December. Normally, December is a very strong period for the markets. And that rally set up. And they've already got the November move. And now we're starting out the last day where we closed out on this light calendar week for Thanksgiving. But is Santa Claus around the corner? We don't think so. We've already rallied in anticipation that things were going to get a lot better. So here's a 2000 reversal, and people were complacent. Here is where we had called for big corrections in 2008. The expansion has gone to extreme levels. When we put in the bottoms over here, this is where this movement has taken place over 2009, 2010, 2011, 2012, and now we're going in the last month of 2013. What I will say in the calendar spread of 2014 that will come upon us is that the volatility for 2014 is going to increase, and that the bull is going to lose control, and then the bear will be in control. Because why would the bear funds make money at various different time cycles in 2014? The mathematical imbalances between both the bull and the bear and the complacency levels, no fear, is that we have had this big move for this number of years, and that we're going into a December month, the last calendar month, where normally a year ago we were getting ready and we put the bottom in the market and we had rallied up. And we rallied up last year, and we rallied up right here. We can clearly see on the weekly level where these rallies happened. Right here. Here's a 2013 rally up. It rallied up to its first reversal. Right here. That was on 5/19. We rallied, we made new highs, and we had another pullback in August. 1, 2, 3, 4 weeks to the lows. We put in the bottoms, we rallied up, and then we had a pullback here in the month of September to the very lows of 10.6 on a weekly level. And from that October move, we've gone parabolically up on the weekly chart to all-time highs, and that the easy money has been made. And in 2014, there will be pockets where we reach an overbought level. However, we are going to see 10% correction in 2014. Not one, but we're going to see two of them. And the thing about expansion models and the recovery is that we got a new Fed chairwoman coming in. It's not going to look good because she's a real dove. And the QEs, the stimuluses that the Fed has been doing, and the worldwide markets have been, printing money faster than you can print the machine that spits it out, is that the world is going to be in trouble again. That means that everything that happened in 2009, as we go into calendar 14 and 15, we are forward looking, is that we are at exuberant territories that we're in a bubble. And bubbles can take a lot of time to pop. And that what will happen in 2014 is that there will be big corrections in the S&P 500 in calendar 2014. And that the Christmas rally, Santa Claus is come and gone. That the easy money has been made. And we're at exuberant complacency levels on both the weekly and the monthly. Now, we have called various different tops in various different calendar years of the marketplace, but this is what it looks like on a weekly. And you know, the thing about it is that there is no buying opportunity. Things are exuberant level, meaning that how are the institutions going to buy at the high end of the market and say, I want to buy and hold again? They've already got that buy and hold from here, from 2009. And yes, it's been a great bull run. And yes, we are very, very complacent. There is no fear. And that's when markets change. This is what happened when there was no fear back in year 2000. We were here. This is what happened back, and we rallied up these calendar years to the top. Everybody thought the world was great. Well, the world is different now than it was over here. However, the bull rally has been in play for a long time. The growth patterns are going to change, meaning that inflation can come in 2014. Right now, we don't have that problem. However, the way that we see it in other periods of time is that the stimuluses, once they stop working, is what happens then is that you get big corrections. So stay tuned. We're going to tell everyone how to get short the S&P and looking at various different bear funds that have been totally smashed down. So where is the easy money going to be made? The easy money has been made. And we're going to look at bear funds short-term cycles called time series in different calendar weeks within the new year that's coming upon us in 2014. So I'm excited about the fact that there's going to be some corrections and that people are going to get hurt and they're going to be in at the highs, and people chase highs. They chase the highs. Look, at the easy money from here has been made. Stay tuned for 2014 updates and how you can make money when things fail. We got the government going back into negotiations. We got new appointment and the Fed governor, a lady, she's coming in. There's a lot of controversy around how she had agreed with policies in the past. She told people way back in the early days that we were never in a housing bubble. And that we have the statements that was made, and we will show and teach people about the economic cycles. And that easy money and the inflationary, what's going to end up happening is the whole world is printing money. Well, we will tell you that GDP, gross domestic product, what do we have? GDP. We are well ahead of the numbers, and that cycle, the economic cycle, is going to have challenges, and that it takes a while. We could, go up for another 4 months, going straight up in January, February, March of calendar 2014. meaning that when it pulls back, when the markets pull back, it's going to make a series of higher highs. That's been what the bull has done all year. And remember one thing, that you do not stay in a one-way market. You will have to have the bear volatility. And how do you make money in bear volatility movements? That means that you get good reversals. There will be a 10% correction in 2014 on the S&P. Not just one, but two. And we're long overdue. We haven't had a 10% correction, and it seems like forever. So, once again, once everybody's all in, this is what we're going to see moving forward in the markets in 2014. We will update it like we always do. We're just giving people the awareness now that it's been a great bull run in 2013. Bull runs end in bubbles, short-term bubbles, and that the bubble that we're in right now is everybody thinks that we're not. But bubbles happen, and the minority side is the bear side of the market right now. That's where we look at make money as we go into 2014. So beware that there's a huge pullback coming in 2014, and we're going to have some volatility starting in this last calendar month of December. Remember, we're not at the lows that we were a year ago in calendar 2013. This is how we started. And we started right here. And then we consolidated and we broke out. We consolidated and we broke out to various different highs. Now we're at 1800 on the S&P. And that's a new record high, as you can see, starting back in 1996. And things fell. And that we had a great move in these calendar years, but it failed. Now going into 14, we've been in this bull run that we called the bottoms back in 2009, and that we would have a tsunami rally is what we used to say. And look at it. Now, people can argue one thing about the pattern of a bull is we have set up a multi-year structure in the market of the S&P, and that we have to tell you that we're at the end of that economic cycle. We will talk more about this in 2014. And once again, there's a lot of money to be made going into 2014 for both the bull and the bear. And that the bear will be in control in various different time cycles of 2014. And then the bull will come back. So it's going to be a big bull and bear fight going into 2014. And that both the bull and the bear are going to have great movements in calendar 2014. And every year in December, we start giving out our forecast of what this will look like. We will be giving several more in the month of December as things set up. If you've been involved in this rally, it's time for you to take money off of the movement. There's a lot of money that various mutual funds have made money this year, and the hedge fund community, the institutions, they've all made great money in this calendar spread right here, 2013. We're at the top, and that the bear will be returning to these markets. Stay tuned as we move through the end of this month of December. Today's December 1. And we're going into January, effective 2014. And that there's going to be big pullbacks, bigger than what we've seen over here. These pullbacks over here that we had on a weekly level when we called them are very, very soft, meaning that there was no real downside pressure. People were taking profits, as they should in bull runs, and these calendar spreads right here, and those weekly spreads. This next one is going to be much larger than what you've seen in 2013. Stay tuned for 2014. Go to the stockmarketfunding.com website. Take a look at all the reversals that we have called before. Remember one thing, that we were involved in this move back in year 2000, and we were involved in this movement right here, that the same pattern during 2003, 4, 5, 6, and 7, and you lost everything. The bear really got in control. And what we're saying now is that look at the calendar spread. 9, 10, 11. We came back every time. The markets were resilient. But the problem is that we ran this whole movement in this expansion, and that there's going to be a lot of volatility in 2014. I can't say it enough. I will tell you, though, that we will update people how a series of time cycles, series of time, weekly time series, however, it's going to happen, and I'm going to leave it 3 month bull run in the S&P, and that 2014 is going to be quite different.